We need to take a look at what is going on in the markets this morning and talk about how it could translate into the weekend, setting us up for next week. I am Dr. Stock, Doctor of Education, and if you need to know what company to do a survey about, you can always take Apple. That's my second Apple joke. I'm sorry about that. You can always put a shell around your head to keep the dad jokes out, but that might give you a headache. All right, sorry about so many Apple jokes. My wife, I said pick a noun for dad jokes. She said apple. So once again, there's another Apple joke. But then she also said eggs. Then I had to tell one about eggs as well. So glad I was able to get that in there. Let's get over into the markets for what exactly is going on right now. Well, what we see, if we go back to last week when we got the unemployment numbers, coming in at 4.3% non-farm payrolls, we had 0.75% chance. This one right here was about 75%. That has now moved down to 54, making it almost even, just a little bit more likely than a 25 basis point cut when September meeting comes along right around the middle of September. September 18th is what we're looking for. What that tells us is that those jobs numbers that come in, the initial jobless claims yesterday, being highly impactful to the number of rate cuts that we receive, and getting a 25 basis point cut means less aggressiveness from the Fed, which kind of gives people a little bit more confidence. We got a rally moving up in the markets. Well, we also have the weekend coming up here. And so today we'll see, if you watch my video from yesterday, you'll hear about the resistances that I talked about and how critical it was that we pushed up above those resistances. If we get rejected instead, then the market can sell back down. So it is possible that we get that push up today, but it is Friday as well. So that's something that we have to take into consideration with the weekend coming up. And, a geopolitical risk that are out there, a lot of tension that's out there right now, especially over in the Middle East, dealing with Israel and everything. That's something to most definitely keep our eyeballs on. So something that makes me think about directly impacting the markets is if people have gains going into the weekend, especially with all the volatility we have, all the uncertainty that's in the market and everything that goes into it, I think that people are going to take profit. They're going to go bird in hand. They're not going to sweat that weekend risk that comes along. I'm probably included in that. So if I have any positions that are in profit territory at that point in time, probably going to lock in those gains on those short-term trades that I have. And then my long positions that I have in my long portfolio, of course, I don't touch. I let those ride the volatility. So we'll see if we get that pop up above resistance today. If we do break up above resistance, again, go watch my video from yesterday. You'll get more of a breakdown on those resistances for SPY, IWM, and QQQ. But go watch those, see where that sits us right now. If we get rejected, we could sell down further. And like I said, we got to watch out for the weekend risk that's coming for us. So if we pop up above those today, watch for some selling down later in the trading day as we head into the weekend, because we have had a really, really strong bounce off of some really critical areas in each of those indices. And, we get that sort of settling, if you will, into next week when we get those inflation reports, and we'll see what those jobs numbers bring. They could bring some more nervousness with it on Thursday at 8:30. So we'll see how we approach that on Wednesday when that comes around. So far, we've had an upward trend, and this past Thursday put us at the lower part of that upward trend. It's all about either breaking that trend to the downside, showing strength in the labor market, which can help stave off recession. If we instead move back to the upside on that, especially if we start to break 300,000 for those initial jobless claims, that's something that can really start putting cracks in it, and we can monitor that through the CME Fed Watch tool. So as that starts to show more rate cutting, more aggressiveness from the Fed to cut those rates, that can be downward pressure for the markets. Less aggressiveness to cut those rates, less hurry is sort of staving off the idea of recession, which is going to be upward pressure for the markets. All right, so SPY, as we look at it here, so far getting rejected from what we had yesterday. We closed at 530.65. Right now we're at 529.44. We'll see how we open today. Got to break up above that resistance to get up to 537. I don't know if we make that in a single day if we are able to break that resistance, but if we do, it should be a significant break. And again, if we break that resistance today, we might return back down and retest it as support going into the weekend. I don't know that a lot of traders out there are going to want to sweat the weekend risk, as I've mentioned, myself included in that. If we go over to QQQ, we have very critical resistance right now. We have historical resistance. We also have trendline resistance. We also have Fibonacci retracements. There's a whole lot of mess that's in here, and I can hide that so you can see a little bit more of what's going on. The RSI trying to climb back up, still down below 50, but rising. So that's sort of good with bad that we have on there. We're above the 200, but we're below the 50. So near term, not great. Longer term, bullish. So we're still in that bullish territory, and you can see that sort of bounce that we got off of that one, but we are near that 50% Fibonacci retracement. So over into IWM, 207 in the pre-market, really got to break that 50-day here. Made it, got rejected. The retest is really what we're looking for. And again, I gave a full breakdown on that in last night's video. You can go and you can check that one out if you want to see that full breakdown. So in the pre-market hours, small cap so far actually up above where we were at yesterday when we closed. So we'll see if that strength continues, if it's able to push us up above that 50-day moving average that I have on here. Now, US 10-year Treasury yield, this is important. For this one, if we continue to see that further drop, we could be signaling a further flight to safety. And like I said, weekend risk, all that coming up for us. It could be a place where we start to see that pushing down more, which could be very bullish for signs for bonds moving up, including the 20-year Treasury yield, which has a very similar look to it. And then that ties together with TMF. So if we actually bring TMF up here, I believe it was Stockmo who mentioned that we hit the 61.8 Fibonacci. I went and checked it out, and he's absolutely right. He said we could have a bounce today. Yeah, well, he said it yesterday, so he said tomorrow. And so there it is. There's that bounce that we're getting so far, up above 55, closing in on 56. We'll see if that does continue. That's probably going to move opposite whatever the market does. So we need to be on the lookout for that. Maybe we get rejected off of those resistances today heading into the weekend. Maybe we break those resistances. We're going to have to wait and see. But with those dropping bond yields, again, if they drop aggressively, as we've already seen, that can be a sign of a flight to safety. Versus the yields climbing back up could mean that we're moving towards more of a risk on scenario rather than risk off. So that brings me to Bitcoin. So for Bitcoin, let me go to the daily chart. This is the 4-hour chart that I have on here because yesterday we actually had a really cool signal on this. There we go. So I put this up in my Discord and, identified myself more as being a mega nerd with the way that today's candle just came up and just touched the 50 and the 200 and had just a beautiful little rejection here right now. Now, mind you, that we already tested them. This is a bit of a retest. Maybe that sells down more. And for Bitcoin, I've already mentioned it partially, it's a risk asset, but only partially. I think that there's actually 3 prongs to it. Another one is that we have it as a hedge to world currencies that's out there. And also people look at it as an inflation hedge as well. And I think that that's keeping up some of the strength that we see in Bitcoin's price action and why it didn't sell off as much as some of the other markets that are out there, why we're seeing that recovery that we did. So yeah, it did sell off, but it didn't sell off down to 25,000. It sold off down to 50,000. So it didn't have that same magnified effect that we've had in previous years. So getting more stability in Bitcoin, always a good thing. So moving in from there. So what's going to happen? The RSI got rejected off the 50 so far. So the RSI is still rising, mind you. That the low that we're at right now as this candle's forming up is still way up above that previous low that we got. The high is up above the previous high. And now we just need to break 50. We also have the 50 and 200-day simple moving averages. I can't tell you how critical this is that we get up above there for further bullishness. Breaking up above those is going to be very good for us if we're long on something like Bitcoin. If we're short on Bitcoin, of course, we want to get that rejection and we want to see it smash right down through and even break the bottom, this trend line that we have down here. You'll notice that we did get that strong bullish bounce off the trend line. Moving into Tesla in the pre-market hours, 197. This thing did come up and it did mess around just for a little bit with 202.75. Again, rejecting. If we go out to the daily chart on this, we got rejected again off that 200-day. So we'll see where where Tesla lands us. And so let's collapse this here too, so you can see a little bit better. Put that in the center of the screen for you. There we are. So that 200-day resistance, this is huge for us. We're also below the 50-day, so Tesla is in bearish territory. So I do have long positions on Tesla, but I also have some short positions too. And I've said it before, I'm going to keep saying it in my videos, especially while the market is so choppy. I got a foot on each side of this market. I got short positions, I got long positions, because I don't think that we're in like very bullish territory where that's the certainty and that I should be net long. And I don't think that we're in such bad shape that I should be net short as well. So a nice balanced place to be and trading on the volatility that we have. And it has worked out pretty well. And I keep on doing that. And it really doesn't look on a day-to-day basis, it really doesn't net out to a whole lot, at least in terms of unrealized losses or gains. However, the things that you are able to capitalize on as the market drops, cash in on the shorts, as the market recovers, cash in on the longs, and it does end up working out pretty well. Not as nice as when you have really strong bullish or really strong bearish movements, but you can play some of the choppiness, and sometimes really good to go bird in hand on stuff like that. So we move over to Nvidia, getting rejected again off this top trend line. Where did it peak out in the pre-market hours? 109. Got to break up above that. Need to overtake 110. If we do get past 110 strongly, then we have room up to like 115 to 118 is that area of resistance that we're looking to break next. Getting rejected off of 115, probably going to be a pretty hard rejection. Might set up some opportunities if we're able to stay on a bullish path. But like I said, and I keep reiterating this, that if we get a market rise today, if we're able to push up above those resistances and today goes green, watch the end of the day, because perhaps a lot of other traders have the same idea, that they start to go bird in hand. Maybe they take profits throughout the day. Maybe we get rejected. Maybe we fall instead. And, like I said, I don't think a lot of people are going to be wanting to carry a lot of those profits into the weekend. I think they'll want to take those profits and they'll have more safe bets going into the weekend. And that might be part of the reason why you see the 10-year Treasury yield dropping, because of all the risks that are out there. Having that safety play to kind of cover you during the weekend risk for the traders out there, that can be a very good setup, a very safe setup. Guys, I'm going to let you go. Thank you very much for watching. If you want to see my buys and sells and how I'm playing this market, make sure you check out the link down in the description for the Patreon. Jump on over to the Discord, join me and my community members. We'd absolutely love to have you over there. And if you want to learn to do technical analysis like I do, you can find a link for the Stockmo Academy down in the description, which uses the bread recipe for trading, which is absolutely incredibly successful and also equally incredibly easy to set up. There's even instructions on how to do that over in that course. Make sure that when you do sign up that you use the code word Doctor, DOCTOR. That's going to get you a massive discount on that course. Guys, thank you very much for watching. I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.